Good morning and warm welcome to this video tutorial of MCX SureGain. We are leading service providers for stock and commodity market. I am Sunil Rana and today we are going to discuss with you about stock market or share market. Share market is a market of buyers and sellers of shares. Share market is just like any other market where trading is done to aim good profit. So in share market as well, wide range of shares is traded to aim good profit. In simple words, trading of shares means transferring money from buyer's account to seller's account and transferring of the ownership of shares from seller's account to the buyer's account. The buyers bid for a particular share at a price and sellers give a price to buy that share. When the buyer and sellers will get agree at a same price, then trade will get executed. In technical language, it is called bid rate and ask rate. But before knowing about share market, we need to know what is the meaning of shares. For making good profit, every organization needs fund to perform business operations regularly. But when the fund is big and they feel that they cannot arrange that amount, then they raise fund from public by the way of IPO. But that fund may be such big that single person or a small organization of person cannot arrange that fund. Then the required money is divided into little parts so that they can arrange the fund from too many people and no burden will be there on few people. Those small parts are called shares. The investors who buy the shares are called shareholders. After arranging the fund, the organization invests that fund into its projects. After investment, they get some profit which they divide into two parts. One is dividend and other is retained earning. The part of profit which they distribute equally to the shareholders as return is called dividend, and they also retain some profit for the growth of the company, which is retained earning. When the shares are initially offered to subscribe in public, it is called initial public offer. At that time, the face value of the share is fixed, but afterwards those shares are traded in public with fluctuating market price because investors get involved and give their own bid and ask price to that particular share. The market price gets changed every moment as per the demand and supply of sellers and buyers of the shares. Trading of shares is regulated by SEBI and trading is done under the surveillance of exchanges. Now the question arises that who are SEBI and exchanges and how do they do their work? The Security and Exchange Board of India is regulator for the securities market in India, and the exchange is the mediator between the shareholders and companies. Exchanges have to act as per the guidelines of SEBI. If companies want to list itself in any of the exchange, then it has to follow the steps as per the exchange requirement. Exchange directly not connected with the investors. Instead, it has given the power to brokers. Broker further give the power to the sub-brokers, and the investors contact to sub-brokers to open their accounts and trade in shares. Initially, paper trading used to be done by the investors. Investors used to get share certificate in paper form which they used to transfer through bank company while they sell it. But after the IT revolution, trading is done electronically. The brokers open the demat account of all investors and providing them trading terminals over which they can trade in shares at home. Now we discuss about how to start trading in share market. First of all, we need to complete our legal documents to start trading in share market. First and most important document you need is PAN card. PAN card is a unique ID proof provided by the government which is mandatory in many other important things such as bank account, passport, etc. Second thing is address proof such as driving license, voter card, Aadhaar card, etc. Third one is passport size photograph. Fourth is check with name printed and bank statement of past 6 months. Once you complete the document, Thereafter, you need to submit them to broker and discuss him about the several important things such as brokerage, limit, etc. Brokerage is a commission which every broker charges on every transaction made by you to buy or sell any stock or share. Apart from broker, government also charges tax on every transaction. Brokerage is the amount deducted by the broker on the transaction done by the shareholder in share market. Limit in the service provided by the broker, by which demat account holder can buy or sell shares of amount more than they are actually having in their account. Different limits are provided by the brokers. Thank you. If you like our video, you can subscribe to our channel, because in this channel we always upload videos about stock and commodity market trading. You also can visit our website www.mcxsuregain.com, or you can call me directly on 9717732557. Thank you once again, and we will meet in the next video tutorial.